Welcome back to Investing Talk podcast. Today, we're zeroing in on a company that's really making some noise in the cloud and AI space, Elastic NV. We've gathered a whole stack of recent pre-earnings analysis on Elastic NV to give you a really clear picture of what matters. Our goal today is simple. Cut through the noise, pull out the key insights, and help you understand the core drivers and, potential outcomes as they head into their next earnings report. We're going to cover the consensus expectations, their history, recent news, even the technicals. And joining me is our expert who's great at connecting these dots. Before we jump in, if you find this kind of analysis helpful, please take a second to subscribe, like, and maybe leave a comment. It really helps us out. And hey, if there's a specific company you'd like us to examine like this, just drop it in the comments below.
Great to be here. Elastic NV is definitely a fascinating one. They're right at that intersection of data, search, and, well, the whole AI explosion. Lots to unpack.
Absolutely. Okay, let's get straight to it. Elastic NV is reporting soon. When exactly is that, and what are the basic numbers we need to know?
Right, so they're scheduled to report after the market closes on August 28th, 2025. Looking at the analyst consensus, the revenue expectation is sitting at $388.43 million for the quarter.
Okay, $388.43 million. And what does that mean in terms of growth?
That reflects about 15.9% year-over-year growth compared to the last reported quarter. So pretty solid expansion still expected there.
And earnings per share, EPS?
Yeah, for EPS, the consensus estimate for Q1 fiscal 26 is around $0.42. Now, it's interesting. Some earlier sources actually showed a negative 10 cents average estimate.
Oh, wow. That's quite a difference.
It is. But that 42-cent figure seems to be the more recent Zacks consensus. You often see this kind of spread when there's debate about growth or maybe some transition happening. It makes the actual reported number even more critical.
So that $0.42 is the number to watch, but no, there's been some variation.
Exactly. It'll firm up closer to the date, but that's the main figure right now.
Got it. What about the whisper number, that unofficial street expectation? Do we have a sense of that for Elastic?
You know, it's interesting. Our sources don't actually cite a specific whisper number for this cycle. Historically, though, for Elastic, the whisper number has tended to nudge just slightly above the official consensus.
Okay, so maybe a hint of expectation for a small beat, historically speaking?
Kind of suggests the street, or parts of it, often lean a bit more optimistic than the formal models. It implies investors are often sort of expecting more.
And how does all this line up with what the company itself has been saying? What's the message from management?
Management's recent guidance has been pretty clear. They're committed to keeping up that double-digit revenue growth and, crucially, improving operating leverage, becoming more profitable as they grow.
That builds on Q4, right? They had a strong beat then.
Exactly. Q4 was strong. They reported $0.47 EPS against a $0.37 estimate, a significant beat. And they've specifically highlighted focusing on margins and, this is key, integrating AI capabilities into their cloud products.
Okay, so AI is a big part of their narrative.
It really is. They're leveraging their search and observability background to build this kind of AI assistant layer. It's about helping businesses ask complex questions of their data, which plays to their strengths.
Right, using their core tech for the AI push. Makes sense. So, strong guidance, AI focus. But how reliable have they been historically? Does their track record back this up?
Well, what's really striking is their consistency lately. For at least the last 4 quarters, Elastic has consistently beaten the consensus estimates, both on EPS and revenue.
Every time for the last year.
Pretty much. Take Q4 FY25, that $0.47 EPS beat estimates by 10 cents, and their revenue, $388.43 million, was about $8 million over expectations. Q3 FY25 also saw beats on both lines. It's a definite pattern.
That's a solid track record. How does the stock typically react to these beats? Is it a pop and drop, or did the gains stick?
Typically, yeah, the stock gaps up on the news. Initial reaction is usually positive.
But
the follow-through can be, let's say, mixed. Last quarter, for example, there was a decent initial run-up, but then it kind of went sideways, consolidated a bit post-earnings.
So initial excitement, but maybe some digestion of the details and guidance afterwards.
Exactly. The gains don't always hold firmly in the days following. It seems like investors react to the headline beat, but then quickly pivot to scrutinize the forward outlook, especially with a growth name like this.
Makes sense. And looking at the bigger picture trends in their results.
Key trends show that sustained double-digit revenue growth, usually in that 15% to 20% year-over-year range. Margins are gradually ticking up, showing that operating leverage improvement they talked about.
And the drivers?
Critically, it's the subscription revenues, especially the parts tied to cloud and AI. That's the main engine here, signaling a healthy move to recurring revenue.
Okay, so history shows consistent beats, positive initial reactions, but maybe some caution on follow-through driven by cloud and AI subs. What about more recently? Anything specific happening this past quarter that could influence this report?
Well, looking at the sources, there weren't any huge game-changing acquisitions or major product launches flagged for this specific quarter. However, they have definitely continued the rollout and integration of those AI capabilities into the core Elasticsearch platform. That lines up perfectly with what management said they'd focus on, so it looks like execution on that front.
So steady execution on the AI strategy. How does the broader market environment play into this? AI and cloud are hot, but are there specific nuances for Elastic?
Absolutely. The AI and cloud sector is still very much in focus for investors. There's a real appetite for what some are calling search AI, where companies use AI to better search and understand their own data. That's right in Elastic's wheelhouse.
So they're well positioned for that specific trend.
It seems so. They can leverage their existing platform and customer base, which is a big advantage. And the overall software sector, while maybe not booming, has stabilized somewhat despite macro uncertainty. Demand for observability and data analytics, their core areas, has held up pretty well.
Okay, that provides a good backdrop. You mentioned watch points earlier, things outside their control.
Right. Currency volatility is always one to watch for a global company like Elastic. Big swings in exchange rates can impact the reported numbers, especially cloud revenue,
Makes sense.
and just overall IT spending budgets. While demand seems resilient, any unexpected pullback in corporate tech spending could obviously slow things down.
And what are analysts saying? Any recent upgrades or downgrades? What's the general sentiment?
We haven't seen any major downgrades, which is generally positive. Recent commentary tends to lean positive, highlighting that cloud growth and disciplined operations.
What? There's usually a but.
Yeah, the but is valuation. While analysts have nudged price targets higher after the recent beats, there's also a note of caution about the stock's current multiple. It suggests a lot of good news might already be priced in.
Okay, so positive on execution, but maybe a bit cautious on the current stock price level.
Got it. Yeah.
Let's shift to the technicals. What's the stock chart telling us heading into the report?
Well, the stock has shown stability, maybe with some modest upward momentum recently. For instance, it was up about 1.67% the day before the analysis we reviewed.
So no big run-up or sell-off suggesting extreme sentiment.
Exactly. Doesn't look like an excessive run-up suggesting wild optimism, nor a major drop suggesting fear. It seems fairly balanced.
And the options market. Any clues there?
Well, we don't have specific call-put ratios cited in the sources. The typical pattern for Elastic in recent quarters has shown a slight bias towards tall pulls pre-earnings.
Suggesting mild bullishness.
Yeah, a mild bullish lean. That's pretty common for software growth stocks where traders often position for potential upside.
Okay. And what about implied volatility? What kind of move is the options market actually pricing in for this earnings event?
Right now, the options market is implying a potential move of roughly plus or minus 8 to 10% around the earnings release.
And how does that compare to how much it usually moves?
It actually aligns pretty closely with Elastic's historical post-earnings volatility. So, the market's expecting a significant move, which is normal for them, but not something totally out of the ordinary.
Okay, brings us to the really interesting part. Given all this, the history, the context, the technicals, what are the potential scenarios? What does a bullish outcome look like, and what signals trouble?
All right, so a bullish scenario would likely be a strong beat and raise. That means beating those consensus numbers for Q1 revenue and EPS, probably driven by better than expected cloud and AI adoption.
At the raise part.
Crucially, yes. Forward guidance for both revenue growth and operating margin would need to come in above what analysts are currently expecting for the next quarter or full year. Seeing strong customer additions or high expansion rates would really seal the deal on a bullish outcome.
Okay, so beat expectations and guide higher. What about the other side? What does a bearish case look like?
On the flip side, a bearish reaction would likely come from missing on either headline revenue or EPS. Or, maybe even more damaging, if the forward guidance is weak or just meets expectations when a raise was hoped for.
Anything else that could trigger a negative reaction?
Yeah, signs of margin pressure, maybe costs rising faster than revenue. Or, critically, any indication that subscription growth, particularly in cloud and AI, is slowing down. Also, any cautious commentary about macro headwinds or maybe increased competition could spook investors.
So, missing numbers, weak guidance, slowing cloud growth, or margin pressure. Those are the red flags. If you had to pick one single metric for listeners to focus on when the numbers drop, what would it be?
For this quarter, given everything we've discussed, the AI focus, the company's strategy, I'd say the most critical metric is the cloud and AI-based subscription revenue growth rate.
Why that specifically?
Because that really tells you if their core strategic push is working and gaining traction where it matters most. It's about the quality and future direction of their revenue, not just the total number.
That makes perfect sense. Okay, this has been incredibly helpful. Let's try and bring it all together. What's our overall leaning for Elastic's report, and how confident are we feeling?
Taking everything into account, our analysis points towards a kind of neutral to slightly bullish leaning.
Okay, why that blend?
Well, the consistent history of beating estimates is a big plus, and they're definitely in the right sectors with strong tailwinds from AI and cloud demand. But
Evaluation.
exactly, the valuation is elevated and expectations are consequently quite high. That introduces risk if they stumble even slightly. So putting a number on it, maybe a confidence score of 7 out of 10.
Is 7, so leaning positive based on execution and trends, but tempered by those high expectations and potential macro risks.
Precisely.
Let's dig into that a bit. You mentioned the valuation risk. What specifically, beyond just missing the numbers, would make you significantly less confident? What's the potential hidden vulnerability there?
That's a great point. What would really worry me, and probably drop that confidence score, isn't just a small revenue miss. It's seeing evidence that the demand for their AI stuff isn't translating into actual customer expansion or winning new business at the expected rate.
So the strategy isn't quite delivering.
Right. If that cloud AI subscription growth rate decelerates significantly, or if management starts talking about more intense competition, specifically in AI analytics, that would suggest their big strategic bet isn't paying off fast enough to justify that premium stock price. It's the why behind a potential miss that would be most concerning.
That's really insightful focus on why they might miss, not just if. So for listeners thinking about how to approach this, any strategic takeaways?
Well, for those who are more risk-averse, probably the wisest thing is just to wait. See the numbers, hear the guidance, let the dust settle before making big moves. Earnings can be volatile.
Makes sense. Option strategies.
Sure, defined risk options could be considered. Things like selling cash-secured puts if you're bullish long-term but want a better entry, or maybe covered calls if you own the stock and want to generate income.
And for the more risk tolerant.
With the implied volatility being reasonably high, an earnings straddle or strangle buying both a call and a put could potentially profit from a large move in either direction. Or, if the pre-earnings chart shows real strength and you have high conviction, a directional bet might make sense.
But generally cautious holding large positions through the event.
Generally, yes. Unless you have very high conviction and the risk tolerance to match, holding large amounts of stock through an earnings release can be quite risky.
It's really fascinating, isn't it, watching companies like Elastic NV evolve. They started in search, and now they're positioning themselves as key players in how enterprises actually use AI.
Absolutely. Their long-term success isn't just about hitting quarterly numbers. It's about how deeply they can embed these advanced AI capabilities into their core offerings and really change how businesses get value from data.
It definitely highlights how fast things are moving and how crucial adaptability is. A great final thought there. Thank you so much for joining us for this look at Elastic NV's upcoming earnings. We really hope this gave you a clearer, more informed view on what to watch for. We'll see you next time on Investing Talk Podcast.